Joining me right now to talk grain markets, it is Chuck Penner of LeftField Commodity Research. Hey, Chuck, how's it going?
We're doing just fine. We're hunkered down, and we're ready to rock and roll.
Yeah, well, we have focused a lot lately on what's going on in the protein sector, and it's, to be honest, not a great story. A lot of negative discussions about what's going on that side of the fence. On the grain side of the fence, in oilseeds, coarse grains, pulses, overall, Chuck, it's not like a exuberant, fantastic, hey, look at me now kind of story, but it's like one that's like, man, not that bad.
Well, overall, I would certainly agree with you. I think the overall grains, oilseeds, pulses, special crops thing has largely skated through this without too much difficulty. There's one exception, and that would be the corn market due to the ethanol and the lower petroleum market, but also the Russian Saudi kind of standoff that they've been having. But other than corn, I would say there really has been very little negative impact, and in some cases, there's actually been some positive news out of this.
Let's look at lentils. What is happening price-wise there? My understanding is we've had a bit of a lift in the lentil market.
Yeah, a bit of a lift is probably an understatement. They've actually really taken off. We had earlier this winter, we had a bit of a bump in red lentil and green lentil prices and things like that. And then they kind of sat back again. And this is one of these cases where there's been this overriding kind of market sentiment of complacency. So overseas buyers are kind of looking at it and going, yeah, okay, I'll buy some when I need some. But there's lots of lentils in Canada, so, we don't really have to worry about that. Well, in the last little while, there's been this thing called COVID-19 show up. And for some crops, it really hasn't had that much of an impact, but for pulses, and especially lentils, I would say beans as well, dry beans as well too, it really has had a strong impact in terms of triggering heavy buying. And whether this is something that is justified or not, or whether it's hoarding or whether there's actually increased use, that's hard to pin down. But for lentils, yeah, we've seen a real flurry, and now they're suddenly realizing, and I've kind of been talking about this for a good chunk of the winter actually, is that no, supplies aren't actually all that heavy. But now there's this realization that, there may not be as many out there as our conventional wisdom, or whatever you want to call it, has led us to believe. So that's a long way around of saying that, yeah, we've had a real lift. So red lentil prices jumped from 22 cents maybe about 2 weeks ago, and then all of a sudden in some cases hit 30 cents. Large green lentils, basically the same type of a move. So the market has jumped just in the last 2 weeks by what is that 30% just in the last 2 weeks.
And who's our export dance partner on this?
Well, we always think, well, it's India, but I'm of the opinion anyway that Turkey is just as important player in all of this. And Turkey is kind of a hub of pulse trade in the whole Middle East, North Africa region. So yes, they import, but they also re-export to that region. And so I think there's a lot of countries there that contacted their Turkish partners and said, hey, we need this. Turkey turned around and came to Canada for that. And again, finding out that our ending stock situation for lentils and for peas, frankly, and are actually very, very tight, or getting there anyway, especially now with this latest flurry of buying. It's going to get even tighter. So it's kind of surprised some people. I wasn't too shocked that things tightened up, but that extra kind of panicky buying was something I wasn't really quite contemplating, at least a few weeks ago anyway. So that's kind of the situation that we've got ourselves into right now.
Could be a good opportunity to make some sales if you've got some inventory.
Well, that's exactly. I was just going to point out that yeah, people are thinking, okay, when it spikes like that, that means it has to keep going higher. But if they have been able to get their coverage and buy their their stockpiles that they've needed, what may happen is that it might back off a little bit. What has also happened, though, at the same time, is farmers have raised their, their drop dead price to, to at least 25 cents, maybe a little bit higher. So, if the prices kind of sit back a little bit, they're not going to go below those levels just because farmers are going to say, no way, I'm not selling again. But yeah, it's reward the rally. Absolutely.
Are we seeing the same sort of price action in field peas, or is that a different story?
It's kind of a similar story, but not to the same extent. So again, I've been looking at supplies not very, very heavy in peas. And so in the last little while, actually some of the yellow pea bids, a lot of places are up through $7.50 a bushel, and some places heading toward $8. So that's a really nice point, a selling point. Earlier in the year, both for lentils and for peas, if you would have asked farmers what their targets were, they would have put them in quite a bit lower than that. But, normal behavior, of course, that we often see is that once prices start going up, the targets start going up as well, too. But, the 20, 28, 29, 30 cent lentil prices or 7.75 yellow pea prices would have gotten a lot of attention earlier, but now it's kind of, okay, well, let's wait for them to go higher yet. Well, okay, maybe, but so yeah, the pea market is moving higher like that. Green peas have had dipped earlier and still quite strong, but the nice thing that we're seeing too, though, is it's not just the spot market. We're seeing some new crop prices also move higher as part of this.
Interesting.
And again, what that tells me is that whole mindset of complacency. There's lots out there. That mindset of complacency is shifting now. So overseas buyers are saying, okay, we better get some for the fall as well too. So we've seen, new crop bids for lentils go up 2 or 3 cents a pound in the last couple of weeks. Yellow and green pea new crop bids are also edging higher too. Not quite as fast, but they're edging higher as well too. So there's a bit of a whole groundswell of or change in that whole mentality toward the pulse market.
Does this recent price appreciation here in the pulse market, does it? We're right in front of seeding time here. Do we see a bit of a lift in acres beyond where we thought maybe 90 days ago?
Yeah, possibly. I think we'll see a little bit. How little that is remains to be seen because southern Alberta, of course, they're really close to making those decisions. When I do talk to farmers, you keep hearing the same thing over and over again. Yeah, we're just going to stick to our rotation. We'll stick to our rotation. So all of the inputs have been ordered or bought, especially with the concern over this supply chains in the crop input system. That's been booked already, and same thing with seed and fertilizer and all of those kind of things. So I don't think it'll be a large change. And what that means then is that if we have this strong demand and acreage only responds a bit, we'll have nice strong markets again next year.
We got a few minutes left here, Chuck. What about canola? That's another one where I think if people haven't been paying attention, the prices may sort of catch you off guard where some of these fall offers are.
Yeah, we're hearing some interesting stuff in the canola market. And, part of it is, canola has largely, again, avoided some of the weakness, the bigger weakness that's been showing up in the soy market. So the soy market is still under pressure, a little more pressure than canola. Canola has the added demand from Europe this year, and there's always that niggling doubt in the back of your mind. What if China, at some point in the next year, comes back and starts buying through Viterra and JRI again? What happens if that goes on? So that there's that bit of a doubt in there as well too. But also hearing some even toward the end of the 2019-20 marketing year, starting to hear companies narrow their basis levels because we were just looking, and my partner John and I were just looking at our canola S&D this week, and okay, well, we need to add a little bit more back into into the crush. So that takes ending stocks down a little bit lower yet. And so we're in a situation now where, again, it's this. There's been this mindset that we have absolutely massive canola stocks. Well, no, that's actually not the case. It's starting to get, I don't know if I'd say tight, but it's certainly not heavy anymore. And depending on what happens with all of that canola that's still sitting out in the field, because that's counted in that ending stock, all of that canola that's still sitting in the field, if that's not all there or it's not the quality that we can use easily, we're in a situation where things might get even a little bit tighter yet. So yeah, I think there's a bit of a, I don't know if the word is sea change or something like that in that whole mindset toward canola too. It's kind of that going from complacency to, maybe not concern yet, but at least eyes are opening a little bit to what's going on.
Yeah, we've got November canola today trading at 476. So it's like I said at the beginning of the conversation about canola. I think there's a lot of producers reading some of the headlines. China last week, sort of the false start on reopening to JRI and Richardson's, and thinking negatively about it. But we need to be checking in and making sure that we know what some of the pricing is out there, because it's not as bad as some people. It's not the hog market. Let's just put it that way.
Oh boy, I feel bad for the hog and the beef guys right now.
Yeah,
that just sucks. Just as an example of that, you still read stories sometimes even in the farm press that China is not buying any Canadian canola.
It's not true.
Well, that hasn't been the case all year long. They've been buying probably a couple of boats every month through some of the smaller exporters, but that has been going on. So you get these false narratives that go on that are that can be way more negative than what reality is. So again, that's fairly positive. I think the Durham market might fit into that category as well too, of moving from complacency to oh boy. And so I've been bullish on Durham for a long time, but now I might actually be right.
Chuck, the farm, you're going after the farm press. That was not at RealAgriculture.com. I assure you that was the competition that you were reading that. I promise you. We've been talking to Chuck Penner of LeftField Commodity Research based out of Winnipeg. Please check out, they do a great job with their pulse and cereals work. They've got some great newsletters. So please, LeftField Commodity Research. Chuck, have yourself a great day.
Thanks very much, Sean. You too.